Hey everyone, it's Evan here from the Trade Risk on Friday, December 29th here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. So 2017 is in the books. We get the final numbers right there with the Dow Jones up 25.5%, S&P up 20%, Russell 2000 13.5%, and the NASDAQ was our leader for 2017, up 32%. Now I rounded off these numbers just a little bit, but you can see it's an absolutely stellar year here for the bulls with virtually no pullbacks along the way in 2017. So what else went on here? We had commodities rallying into the end of the year. We'll talk about that. The past 2 weeks or so, we've seen a nice rip off of the lows here in a lot of these commodities. And we also have stocks that I think are poised to have a bit of a range expansion here into 2018. I think they're set up for a pretty interesting spot. We're going to talk about all this and some more right now. All right, we'll jump in here with the S&P 500. You can see we're still looking at the cash weighting here because the SPY ETF did go ex-dividend a couple of weeks ago, so those charts are a little bit skewed to the downside. So I'm still looking at this cash weighting, and you can see on Friday, we finished down 6.5 points. That's 24 basis points to the downside. But overall, when we just look at the action here over the past 2 trading weeks, it's been very sideways. We've basically made no progress one way or the other ever since topping out here back on December the 18th, right around 26.93 or so. We've pulled back and we've been trading in about a 20-25 handle range. So when we look specifically at this week, Tuesday was the start of the week. It was this very narrow range day here. We basically grinded higher Tuesday, grinded some more Wednesday, a little bit more Thursday, and then we gave it right back here in one day on Friday. So a very tight, narrow-ranged week. If we go to the weekly chart, you can see what we actually have now is this inside week from a already tight trading range from last week. So if you recall from our last video, we had this weekly candle that we were sort of analyzing, and we basically said, look, we popped up to new highs. We kind of failed to get a lot of traction to the upside. We didn't break down. We kind of just closed right out here in the middle of the trading week, and we wanted to see how we wait and see and how would we follow this week up. And now that we saw how we follow it up, it's actually just a spring that got even tighter. So we actually had an inside range week, which means basically going into 2018, I view this market as something that is on sort of a breakout watch or a range expansion watch, and the levels are actually very tight right now. If we go back to our daily chart, it's really the lows here from 26.75. This sort of embodies this past 2 weeks of trading. This is where support has come in. We have resistance up here at 26.93. So again, that 25 handle range or so is basically what I'm looking at. And clearly we're kind of going out on the towards the bottom end of this range. But heading into a new calendar year, new money, new asset allocations, anything can happen. We could easily see a nice expansion here in range in one direction or the other. When I look at this range, though, it reminds me of many of these other kind of brief periods of consolidation through 2017, where we kind of spend time moving sideways, mostly through time, not through a pullback, and then eventually that magical bid kind of appears and the uptrend continues. So not saying that has to be the case, just saying this looks very familiar from sort of the sideways consolidations we've seen this year. And when I look at something like breadth or market internals, we're actually still seeing tremendous strength there. The AD line on a cumulative basis is basically closing at highs today for the NYSE. And if we look at net 52-week highs minus the lows, that's basically, there's still a nice expansion in 52-week highs versus the lows. So when we take a look at some of those metrics, we look at this consolidation through time, we're right underneath all-time highs. It kind of makes you think that bulls are still in control here, but we shouldn't get complacent. We should be aware that we did spend a good amount of time moving sideways here. We know what our support levels are. If this starts taking out multi-week lows, it's something to pay attention to and something to, hedge yourself, dial back exposure, whatever your strategy basically tells you to do. So that's essentially the thought process. That's what I'm looking at heading into next year. I do expect some range expansion. I do note the sort of bullish backdrop through market internals, through the trend momentum arguably weakening here a bit on the daily chart, but on that longer time frame, it's still very much up and to the right, making those new highs or holding pretty strong. So that's the S&P 500 levels I'd be paying attention to, 2676, and then below there we got about 2660 or so, down to the highs here from early December that we topped out on, and then that we rallied back above throughout the mid of December, and now we've been basing above. So those are the two levels I'd be paying attention to on the downside, and then of course new highs 2693 or so to the upside. If we look at the IWM here, I think we also have an interesting setup here heading into 2018. You can see on Friday, this action here was not the prettiest candle that we could have thought up here for finishing off the week and the final trading day of the year, but bears did get the selling done today, 1.23 points to the downside. That's 80 basis points lower. And more importantly, though, is we have this gap higher up to about 154 or so. That was basically the breakout level that would, sort of break us out into new highs, but we immediately failed there. The opening print was the highs of the day, and we basically sold off all day and engulfed the entire trading week to the downside. So we had this bearish engulfing bar that didn't just engulf the previous session, but it engulfed the previous 6 trading sessions, and closing at the lows, or basically at the lows of the day, right at that 20 period moving average, slightly above it, which is pretty flat right now, but still below price. That is the one sort of grain of salt good thing going on here for the IWM. When we analyzed this back in last week's video, we said, look, we really wanted to see this higher low stay in, which was right around 152 or so, I think is the general area. I said I want to see the IWM base and hold above. If it can hold up here and keep, the majority of this 15th to 16th rally, this double day rally here up towards these highs here, if we could put in a higher low above this area and then lift up to new highs, so a nice little consolidation there, a higher low, and then a breakout, that would be constructive. We're testing that right now. We haven't quite broken below it. There doesn't look to be a tremendous amount of damage here just yet, but it's certainly flirting with, if we get a follow through day, that would seal the deal. That would put the sellers here in control in the short term. The bearish engulfing bar I don't like at all, but I'd like to see more follow through for this move to really prove that the bulls have lost this range up here and that the sellers are about to take control. So for the IWM, a bearish action here going out to finish off the week. It's at a very vulnerable spot. I'm looking to see if this does get that follow through. So I think you're right on the edge here, and I think this is the level where if bulls are going to step up, they need to do it now and not get that follow through day. We did have a long position right in here is when we did some buying in the IWM, looking for this, for this support to ultimately hold. We did sell the rest of that today, a little bit prematurely. Again, I would, if this were my only position, if I didn't have any other longs on, I'd probably still give this time for more convincing follow through again to get me out of this position. But because we still have a number of other longs on, because we're thinking about this in terms of a portfolio, which gets into some specific strategy decisions, we did close out our IWM here today for a small loss, no longer in the trade that we originally entered right here on the 21st, because we do have some other exposure on. We're not getting bearish. We're not trying to short this outright or anything like that. We're just simply making a portfolio decision to raise a little bit more cash heading into 2018, but staying with some other long positions that we have on. So that's the Russell 2000. I think it's, again, at an interesting spot to pay attention to heading into 2018. And we're looking for that range expansion to see if the sellers do get some follow through there. And then finally, the NASDAQ 100, which, really when we look at this, you could say, has already started to break back down. It's back below this 156.60 level. These were the highs here from November. We recently got a breakout above that in December 15th as we rallied to new highs here, and we slowly have been pulling back. And now again with this ugly kind of session that we put in here on Friday, closing at the lows, down $1 in the Qs, and below the highs here from 157, 156.75. For me, for the Qs, to get that momentum back in play here, I'd like to see us just get above 157. That would be my line in the sand to get more bullish, to get that momentum returning is above 157. The longer we stay below this general area, the more concerned I would have with the Qs, at least falling back in this range and perhaps just consolidating sideways. Once again, it doesn't mean we have to, have some severe major pullback. It just simply from a, tactical momentum basis, I would like to see us back above 157 167 to keep this market as strong as possible. So that's something, again, to pay attention to see if the sellers do get follow through to really kind of seal this move lower here into 2018. I think that's something you want to be paying attention to. When we look at this weekly chart for the NASDAQ 100, you could see, again, very much just traded the entire week under last week's range. So again, when we take a look at just this weekly chart here, you can see we're kind of coming back into the past, month or so of trading, whereas for the S&P 500, we're still holding higher. If you look at the Dow, we're still holding higher. The Qs here are now sort of back to kind of the lagging standpoint, and the IWM again is still in a sort of interesting spot there on that daily chart, like we sort of just talked about. So that's the landscape overall. We've lost some momentum overall in the market. Market breadth is holding up. The trend on those longer term time frames holding up, momentum still holding up in the longer term time frames, but there is some short term concern here, and we're waiting to see if we do get that follow through. So again, it depends on your strategy time frame, really, on whether or not you'd be paying and paying close attention to any of this recent weakness that we saw this week. So that's the market environment overall. Let's take a look here at some of the other major markets. We see TLT, which had a strong comeback this week, 1.68%. And this is after a horrible last week. Remember, we talked about this week, 2.79% to the downside. We're starting to break below this trend line, starting to break below the 20-period moving average. And then just this week, we came ripping back here. And we haven't quite recovered all of those losses, but we did recover a good portion of it, about 50 to 60%. We're back above this trend line here. And this just speaks to the noise in this pattern here, and sort of the headache that when I look at this weekly chart of the TLT, just notice how much sideways kind of overlapping and lack of trend there is right now. And that's what would have me concerned and has had me concerned about trading this market in any way, in any direction, just because this does look like it wants to be such a headache here. And in fact, this very fast sort of drop here did look like an actionable fast breakdown and a potential short opportunity there to build on some momentum to the downside. But you can see it just get completely chopped up if you were trying to short down here at these lows, or even on this day here, it just quickly gave it right back. So TLT still in a tough spot. Bulls kind of stepping back in there. And again, when I look at this longer term, I would just again sort of gravitate to these larger levels, 122, and then really this 129 to the upside, somewhere up here to take out all of these recent highs. I think getting out of this range altogether and getting some consistent directional trend in there is what I would want to see before trying to place a trade in here throughout this headache. So that's the TLT. Nice bounce back for the bulls. If we look at oil, we also saw a nice climb by bulls here as well, 3% to the upside. You can see it was dancing around, consolidating in here for quite some time, but it did march itself higher. It's now trading above 12. It's above all these recent highs. Bulls are firmly in control. Natural gas, this thing has been crushed over the past several weeks. This whole year really was a pretty tough year for natural gas, but to finish off the last trading week or so, last two trading weeks, natural gas saw a bit of a recovery, just stabilized a bit last week, finished up about 0.5%, and then this week came ripping back up 11% here, and it's starting to get back above some of these key levels. So all of these commodities seeing a pretty good kind of reversal move today, this week, or continued surge to the upside, as it were, in oil. But natural gas, you can see getting back above or at this 585 level. There's lots of supply in here. I still think structurally, from an intermediate term basis, natural gas is still in a pretty tough spot, still pretty damaged, and sellers have that structural advantage to them based on trend. But if you're tactical in here and you want to play around in this, then clearly this is where some of the action is. This is where volume's starting to pick up here the last two trading days of the year. You could see nice above average volume, 18 million shares here on Friday. So good volume, nice bounce. It's coming into a tough spot, lots of previous supply, not my cup of tea. So I think you got to be pretty active there. Next, if we go to metals, also seeing a huge week this week as well, 2.25% up for GLD. And just in the past 3 weeks or so, it came from really this breakdown week, which we saw to start off December, losing 120 and falling 2.5% to the downside. We got the reversal mid-December, and then we just added some gains and added some gains. So when we go to the daily chart here, take a look at this absolute V-shaped recovery here back above 120 or so. That was that first line that I was kind of looking at to say if the bulls needed to get a couple of closes above there to at least stabilize and hold on to things. And they did even better than that. They actually just continued to make progress here, and we're suddenly now trying to break back above all of this previous supply in here. So for me, when I look at this very sharp move back above all of this with a false breakdown, you know, I didn't catch any of this at all. And when I look at this type of move now, I am much more interested on the long side. If this can continue to hold up, base out, I would not chase anything here, not my style. But if this could base out and move sideways here and start to put in some higher lows, I like this as a false breakdown and a fast recovery to the upside for a potential trend into 2018. So GLD is something I'll be paying attention to come January. Again, not ready to chase that just now, but something to watch. Silver. Very similar comments here. I tend to actually like the structure of gold a little bit better here, just because when you look at the weekly chart of silver, notice it hasn't really taken out all of this supply in here from October and November. It's still kind of hanging below here. It's hanging below the 16.25 level. So I think it's got a little more to prove, whereas GLD has already rallied back above that level. But similar comments apply. Very fast rejection here of these lows, V-shaped rally to highs, good volume coming in, something to pay attention to heading into January as well to that upside. So that's GLD, that's the metals. I think that's all the other majors. Let's take a look at some of the sectors here. First, we're going to look at XLI. Let's see if we can get that up. Let's see. All right, so if we look at XLI here, you can see, you know, not the most exciting chart, but it's been just kind of continuing to grind higher here above the 8 period. It's not giving much back. You can see it's not loaded with a tremendous amount of momentum here, but it is holding up on a relative basis. XLI still right near those highs, not willing to give too much back right now. The volume's been light, but something that has emerged and continues to work there for the upside, for the bull case. Materials, same thing as well. Again, don't love the candle today with this gap up failure and close near the lows, but still on a relative basis, it's trading at highs. It's above the 8 period, it's above the 20 period. Both are rising, both have some good trend and momentum behind it. So XLB looking strong as well. XLY starting to actually look like it could start to dip and roll over here. It did have this nice rally, had this big base breakout back here in mid-November. Straight line run up, and then for the past 5 or so days it's been, you know, more or less moving kind of sideways here, and we're starting to break below some lows. So something to be a little bit cautious of. It was down 58 basis points, closed near the lows. Something to pay attention to heading into next week for that follow through. Staples still, you know, spending a good amount of time here near the highs, fairly resilient, trading right at those highs. Again, 2 weeks or so, very sluggish action, closing near the lows of the session today, but still on a relative basis is holding up compared to some other sectors. And then financials, same kind of comments here, moving sideways, losing momentum, but still on a relative basis holding up near those highs. I think with most of these names, with most of these sectors we just talked about, they are, you know, the leaders that are on a relative basis way up there underneath the highs, but we need to be careful. We need to see if we do get that follow through breakdown in these sectors, if we actually start taking out the prior week's lows and building that selling momentum to the downside heading into the new year. That would be definitely a red flag for us as we start off in January. So that's what we should be paying attention to. And then for the downside, some of the sectors that are already lagging or breaking down, as XLU continues to be in real tough shape. It came all the way back from the breakdown through this 55 level to the bottom end of this range to some of the recent supply in here from earlier in the year. So this continues to be in a tough spot. You know, tactically, can it bounce? Can it get a few day rally and oversold rally? Absolutely. But structurally, this is in a pretty tough spot right now. But pay attention to, I'd say, this 52 level, which it did find some support at. Healthcare also a little bit more convincing off of the lows here. $84 were the high. I'm sorry, off the highs. $84 were the highs. It pulled off of them, rallied, and then it tried to, tried to have that nice rally today. It failed. Highs of the day were basically at the open, and then we closed right here at the lows. So XLV continues to look again, not the most, not necessarily saying it's bearish, but just on a relative basis here, it has been lagging. You could argue that there's some nice kind of rounded, maybe inverted, head and shoulders, or whatever you want to think of this as. That could be at play if it can hold above 82, 82.50 or so. I think that's an interesting spot. And then finally, XLK, again, off of the highs here. So it made highs up here on 65. It's kind of, it's below them now. It's testing this 20 period. So a little bit weaker than some of those other sectors. Then you have finally the IBB, which had a pretty tough session today on Friday as well, rejecting off those 108 levels. It's been in a pretty tough shape ever since October when it had this big move lower from about 110 down to about 100. It's been trying to crawl back up, but it's still in, still well off of the highs, or at least 5 or 10 handles off of those highs. So it looks to be in that lagging sector on a relative basis to some of those other sectors out there. So that is the market recap overall for 2017. I hope you had a great year. Thanks so much for watching week in and week out. I appreciate all the views I get. Hopefully these videos are helpful for you guys. If you do like them, if it's your first time here, do subscribe to the channel if you want to stay up to date with the videos that we publish, which will continue to do so into 2018. So thanks so much for watching. Have a great new year, and talk to you on Tuesday.